From the morning reading, when you take a look at the earnings reports that came in during the month of April, it really shouldn't be any surprise that we're experiencing the current weakness in the broad markets. In terms of guidance, the normal ratio for beats would be, or raising guidance, would be 49.8% for the month of April. We're coming in at 37.3. That's about a 12-point differential to the negative side. Earnings surprises, beating the whispers, revenue surprises, every single metric on the April earnings came in below the normal ratios. And remember that earnings are key to the future expectation of the value of those companies. And much of what makes up the stock price is the expected future value of that company. When you have these kinds of numbers, you get weakness. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:40 a.m. Central Time, and I'm recording this in preparation for the market day of May the 6th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's take a look at our morning report and see just what happened in the overnight action. Well, in our own 4 broad market indices, we're neutral to slightly bullish, very slightly as of the time of this cut. The S&P up 0.17%, the Russell up about 0.25%, NASDAQ scratch, YM or the Dow is also up about 0.2%. You have crude oil up huge, up about 2.47%. The euro up about 0.3%, and then the bonds down about 0.25%, and gold down about 0.33%. In terms of overseas action, you have China following on yesterday's weakness, also down about 1.62%. Hong Kong down about 0.4%. Japan scratch, Germany up about 0.75%, and the United Kingdom at scratch. In terms of macroeconomic reports for today, you have ADP non-farm. Let's see. Oh, here you got Fed Chair Yellen speaking, so that's always possible to move things. You have crude oil inventories. And you have another FOMC member, Lockhart, speaking. So there's definitely some action today that could move things. These wild cards with the Fed chair and FOMC member Lockhart speaking. You just never know what will come out of those things, especially Yellen. In terms of tomorrow, we have the usual Thursday reports, including unemployment claims. Of course, everything is leading to Friday's monthly employment report. That's the big one for this week. In terms of our current volatility conditions, our headline number, or the short-term VIX, up sharply yesterday, and 14.64. Now, this is still very much in kind of normal range, but it's up quite a bit from where we have been in the recent, so kind of keep that in mind. In fact, you look here at the implied IVs, these are all still very low numbers all the way across all 4 of the broad market indices. I will make a point about the number of standard deviation moves, though. We had a period there of about 2 weeks in which it was very, very quiet. Well, certainly 3 of the last 4 days now, across most of these broad market indices, we've now had more than a standard deviation move. And while I have a 1 here on the S&P and the Russell, these were close to 2. And if I had chosen to round, I could probably even have put 2s here. So we have had a return of pretty significant price action to the market in 3 of the last 4 trading days, so that should be noted, though at the same time we really haven't gone anywhere yet. We're not even back to the bottom of the range, so kind of keep this in mind. Now that doesn't mean that we think everything's hunky-dory. We do think that there are some serious warnings that the marketplace is giving us. We are, however, in the big picture, still phase 3, expecting higher highs and higher lows. But within those warnings are the IBD status, uptrend under pressure. The GMI index is at a 3 out of 6. And actually, this right here, this is now bearish, active trader market posture. And look at all 4 of the indices. S&P bearish after just 1 day as in a bullish posture. The Dow is also bearish, NASDAQ bearish, Russell severely bearish. It's up underneath a 25. So significantly bearish action on the market posture for the Russell. Position sizing opinions, as you would expect with these kinds of setups, would be up to 50%. So definitely reduced position sizing. From a hedge warning status, we're still at level 1. We're starting to, especially if we get significant downward pressure today, we're starting to evaluate as to whether this might need to go to level 2. We didn't quite get there yesterday, but we certainly had even more warnings coming into the market. From the volatility base, you had a market in decline and a sharp increase warning, both firing yesterday. We are back in, as of the last 2-3 days, back into a daily squeeze on the VIX. And obviously, if we get another day like yesterday, that could fire. And if it fires, it's going to fire to the long side of the VIX, which is to the downside for the market. So that is certainly a warning. Distribution day continues to be a problem, and it's that combined with this IBD status are the 2 leading reasons why we have our current hedge warning status. But an S&P at a 7, and NASDAQ at a 7 on the distribution day count, this is not the sign of a bullish, healthy market. You have also, look at this, new high, new low, 505 new monthly lows for yesterday. Obviously, that is not good. We will flag that level at 300, and we were approaching twice that. You still have that crash warning out there from our E-mini charts, and then you also have on our intermarket risk aversion indicators, one of them in danger of rolling over right on the threshold of going to risk off. In terms of separate opinions, option income strategies, we're still inside that acceptable window. It's still okay to put on option income strategies. I put one on yesterday, but it's a, in that case, it was a big, very forgiving option income strategy. We'd have to have really significant weakness to be able to even get to the first adjustment point on that. Bottom line, you need to consider the potential for increased volatility and what that might do for your strategies. It's probably not a great market posture for a weekly calendar on a RUT index or something like that. Probably much more forgiving to do big, broad iron condors or way out of the money, put credit spreads kind of thing. Covered calls, I wouldn't particularly suggest initiation of any new covered calls positions, but I would suggest that if you're rolling something and you're wanting to keep it, a 1-to-1 distribution between in the money and out of the money strikes probably would be what's called for. Put selling, certainly I've got a number that I'm looking at to potentially set up and evaluate. It is an acceptable market at this point to sell puts against the core portfolio basket of stocks in the size that you are willing to own. In terms of sector-specific market postures, you see a lot more red on here. Really, the only thing that was holding up of late is financials. Transportation, down, down, down across all 3 time frames, and that is not a good sign for the market. You combine that with what we saw with the Russell and this very severely bearish market posture. Normally in bull markets, we expect to look for transportation to be helping. We look for the small caps to be growing. We look for the NASDAQ to provide leadership, often looking for the NASDAQ to be outperforming the S&P. And none of those things are happening right now. So if you need more evidence for just how seriously in trouble this bull market might be, those are all tells to keep in mind. And indeed, even if you've got a stock or sector that is doing well, if the market goes down big time, everything can go with it. As they say, the tide goes out. Look at this, utilities down over 2%, telecommunications down 1.5%. This is some big numbers yesterday, and you can have a lot of progress chewed up in a very short period of time when you get these kinds of market conditions. So considerable or significant risk needs to be taken into account as you are initiating positions, but also you should be all over risk management and profit management right now. We could easily see support lines fall, and all of a sudden you look up and you're down 40 S&P points. So it's that kind of market potential. Now on the flip side, we're still not even at the bottom of the range. So we could, at the end of today or the end of tomorrow, be back up near the top of the range and talking about new highs again. That's the kind of marketplace we've had in recent weeks. But just be prepared for the downside. It's your thought and consideration under the moment when it is not in the heat of the drop that helps you make better decisions. If you wait until everything is just dropping, then trying to decide what to do, that doesn't usually lead to good decision making about your risk management, your profit management of all your individual positions. So that should be enough for today. If you like what you're seeing here, obviously we appreciate you liking us on YouTube or your favorite social media platform. We're in all those places. We are also, every day putting into practice the kinds of things that we talk about here in our portfolio and options trading chat room. We've got a fine membership there with all kinds of benefits. You can get more information at this website. It goes into great detail about the description of this product, and we feel like we're definitely providing a great value. This is only a $50 a month subscription, and yet at the same time our performance and returns, and albeit a market that's certainly been challenging in the first several months of this year, we think is something to tout. So if you'd like more information, certainly come to the website and check that out. We do have a free trial, 2-week free trial for you to check that out. And then to our disclaimers, hit the pause button if you need more time to review this. And as always, we greatly appreciate you each and every trading day in the Falcon Global Trading community. Good trading.